Welcome back to another episode with ByrdAdatto. And, we've shot a lot of different videos, and each time, besides Michael and I, we'd like to have special guests that can bring something that's different. And as lawyers, we know that certain areas, sometimes you know what you know and you know what you don't know. And at ByrdAdatto, we know that how to handle certain things in the business and healthcare. But when it comes to tax issues, we definitely like to bring people that we know it. And so today we have a special guest who is coming to us very far away because we're in Dallas, Texas. But I'm going to let Michael introduce our special guest.
Yeah, so Ben Damsky with Blais Halpert Tax Partners is joining us, and we have involved Ben with client deals where more complicated tax issues have become involved. And what we've really appreciated about the firm is that Ben and his partners have a wealth of knowledge. They come kind of like us from a big law background and have established a boutique firm. But they can communicate really complicated tax issues in a digestible way. And so we're excited to have you join us today, Ben. And, really, I think we'd just like to open the floor up for you with all the changes recently, in light of COVID-19, just to highlight things you think would be beneficial for business owners to know with kind of tax implications from all of this.
Yeah, so the disaster relief payments come into play under a pre-existing statute. And so the way it works is that if there's an official disaster, then an employer can make payments to an employee, and those payments are deductible to the employer, but they're tax-free to the employee. And so when President Trump declared the disaster to be officially a disaster for these purposes, it kind of reignited this previously existing statute. And it said, here, employers, you're free to make a payment to your employees, and those payments will be deductible to you as the employer, but they're going to be tax-free to the employee as well. And just to really quickly hit on the types, it can include small things, masks or sanitizers, but bigger items too, like temporary housing, childcare services, potentially having to take an Uber to or from work. These are the types of payments that if your employee reasonably and necessary has to incur because of the coronavirus pandemic, you can, as the employer, reimburse them essentially, and it's going to be tax-free to that employee and deductible to the employer.
Cool. Yeah.
And what I like about this, Ben, and when I read that article that y'all posted, is this is not something that's brand new. I know for us and a lot of people, they're struggling with how do I deal with the PP loan, or how do I deal with this new loan, or this new program. This has been a law that's been around for a long time, and so it's well established as the do's and don'ts in some capacity. I know, and I say in some capacity because the pandemic is different than a lot of other disasters, but there are some good things for you guys to help guide our clients on these type of issues when they want to start looking into it. And that's what I love, the fact that you guys noted that.
That's exactly right. And yeah, it provides a lot of framework because it is pre-existing. And so where the rubber hits the road, so to speak, is what is reasonably necessary as a payment to an employee currently in the coronavirus pandemic, which is obviously different and novel than anything we've ever seen. So it's an interesting thing.
Are there any other, that's great. Are there kind of just with the little time we have remaining, some quick hits of other things that people should be thinking about from a tax perspective?
Yes, there are definitely other things to be thinking about. The problem here is that there are almost too many things to be thinking about. And this may be, I'm sure, shocking to hear. It's, when it comes to tax, that things are very complicated. They're very, very fact dependent. And so it's hard to say exactly what types of relief might be kind of generally available to employers. So I'll just kind of walk through and hit a couple really quickly high items. And I think taxpayers are going to be well advised to kind of take a broad search to look through all the different types of relief and see what might actually apply to their situation. So first, there are a couple payroll tax credits. So when an employer makes payments to an employee, they have to pay payroll taxes on those wage payments. And there are benefits where you get to either credit on the amount of employer taxes you pay, or you get to defer of those payroll taxes. And the first credit is if an employee is on sick leave because of the virus or paid family leave, you can basically get the cost of paying them while they're out covered by the federal government through a credit. The second credit is if you keep people on the payroll, you can get a payroll tax credit, but it's important to note that you can't get that particular credit if you are getting the PPP. So people have been viewing this payroll tax credit, the other one, which I won't get into, as kind of an alternative to the PPP, because the PPP has been kind of the sweet spot, and I assume most listeners are familiar with the Payroll Protection Program loan. But these, if you can't get that, for instance, if you're doing a substantial workforce reduction, you could look to payroll tax credits, a different way to recoup a benefit. And then in the last 30 seconds, I'll just quickly highlight that net operating losses, which is a term applicable to entities organized as corporations, which is slightly uncommon for medical professionals. But if you have like a med tech company, for instance, you may be organized as a C corporation. Much more permissible net operating loss rules right now. You can carry them back and potentially get a refund to get liquidity currently. Highly leveraged businesses, previously there were reductions on how much interest expense you could deduct. Those have been suspended temporarily as well. And certain losses that generate from your business, like if you're a physician who's involved in kind of a side project that's at the investment stage and losing money, you may be able to apply more of those losses to your regular income. You may also be able to do that retroactively as well to get a refund.
That's great. And, I think the one thing I grabbed onto, which is, I think Brad and I's mantra in normal times, which is get advice when it comes to tax law, because it's so complicated that we can compare it to health law. People tend to not understand it, and so they just ignore it. And I've seen so many times, not just people avoid trouble, but actually realize some tremendous economic benefits from having a tax strategy, whether it's navigating a pandemic or a transaction. And so, if there's anything for our listeners to really grab onto, is not to ignore that and factor that into the equation as you're doing your planning.
Yeah,
Really agree.
Agree, Michael.
And I think that's a great way to leave, is making sure you surround yourself with the experts that you need, and make them realize that, just because your attorney is awesome and you like working with us, that we have resources to other attorneys to help look at other areas of law. But we're almost out of time, so I want to thank you again for joining us, Ben and Michael. Always good to see you.
Absolutely. It's been a pleasure. Thank you so much for having me.
Okay, and we'll looking forward to speaking to you next time.
Excellent. Take care.